Eric Muathe for December 6th and December 7th, 2014. Let's take a look at the markets on Friday. We see that the Dow closed up 0.33% and Nasdaq was up 0.24% and the S&P 500 was up 0.16%. If we take a look at the weekly action, we see that the Dow came close and is very close to cracking above 18,000. Now that's a surprise to all of us. I know it is, but it could happen, it can happen, it might happen. So up 0.73% for the week. This past week was the Dow. Take a look at the Nasdaq, or the S&P 500 for the week was up slightly, 0.38%. And for the week, we see that the Nasdaq was down actually 0.23%. Now, the one thing I do want to point out here while we discuss the Nasdaq is we have to be careful here in assuming that the market has to go down, because quite frankly, the fact that it is holding above the prior all-time monthly closing high, and that would be at 46.96.69. So as long as the market is holding above the prior all-time monthly closing high for the Nasdaq, then this market could actually take off and continue even higher. So be very careful. If the market does break back below 46.96, then maybe this breakout attempt has failed. As of right now, the market is holding above that, so we have to assume that the market continues being strong. And also the fact that the monthly RSI continues trading above 69.1 on the monthly chart, that is indication of strength. If we take a look at the Nasdaq weekly, we can see, yes, we had a slight close to the downside for the week, and which might start bringing the question of whether the Nasdaq is finding resistance here at 69.1. Also, we've been expecting some type of resistance around this level here based on this line. Now this line here was responsible for a short-term move, which was these highs, and the market had a slight drop. Ever since then, every time we come above that line and back below it with uniform activity, the Nasdaq has been stalling. Back above that line and back below it with uniform activity, that was this high. So you can see here, if the market continues showing a reversal signal like that, then that's going to suggest that this is eventually week to week going to lead to a pullback. If we take a look at the Nasdaq daily, frankly, it continues holding above the prior highs recently, and so this breakout continues being in play. So even a pullback that brings the market here and holds and bounces higher is still going to be healthy. So it's going to take a lot of energy to break down the current momentum in the market. And also you can see that the prior highs were broken when the market moved above this line here. So this move above that was a short-term breakout, which actually coincides with this price breakout at this point right there. So as long as the market is holding above this line, the market continues being healthy. And even though it's a surprise that the market continues moving higher, really, if you look at the monthly charts, the market will continue moving higher just because the monthly charts are super powerful. Let's take a look at the Dow weekly. Now the Dow continues staging week to week to week, back to back to back to back to back weekly closing highs ever since it broke out there above 17,279. And so as long as it's holding above this general breakout area, the market should continue doing well. The market is trading well off the 10-week moving average, which is a sign of a healthy market. We can go to the weekly RSI and we can see that this breakout here is now notoriously holding the market high. Now there's a line that we've been drawing and expecting some type of resistance. The line is there. And we've been saying that if the Dow finds RSI resistance on this line, that's bearish. But if the market moves and trades above that, which is exactly what it's doing, the market should continue doing well. So surprise, surprise, the market has failed to hold those breakout levels. So one of the resistance lines was here. The market is above that. The other resistance line is here, somewhere there, and the market is above that. So it's going to need the market to break back below those, at least one of these lines like that, for this to be a major high. So as long as the market is holding above those lines like it's doing, then this is a market that is free to move higher. Take a look at the Dow daily. One of the reasons why the market refuses to go down is because the daily RSI is holding above 69.1. And that's just a level of resilience, a level of strength. We also had recently broken out above the declining RSI line. So this line, once the market moved above that, we speculated that anything above that line would keep the market moving higher. And that's exactly what's happened, even into Friday's close. Now, if we take a look at the hourly, we start seeing some types of... The hourly is where the problem is, in my opinion, the short-term view. Number one, if you take this line here connecting the prior high, the prior support line, there's a break there. This line continues being back tested. So ever since we broke down here, this line has been resistant since then. This is where the market seems to be struggling to move above this line. Now, we can't put too much weight on that analysis. It's just a line. But the one thing that bothers me, or one thing I'm curious to see, is the market seems to be making higher highs, but the RSI keeps making lower lows. And keep in mind, I'm using the RSI period of 26. And this is 6 months hourly chart. Let's take a look at a shorter hourly chart time period. So now we're taking a look at the Dow hourly, a clean chart. And this is 3 months worth of hourly data. Just want to show you the negative divergence. We are making higher highs in price here on an hour-to-hour basis, but the RSI notoriously continues making lower lows. I think this could be a problem, suggesting lower prices unless the market once again can trade above that line. Trading above the resistance line here is bullish, but as of the close on Friday, the market is showing resistance, so we have to assume that if you are going to take a side on a short-term basis, which side the market was going to go, I would suspect the hourly charts are indicating that the market wants to go down. Let's take a look at the Dow 30-minute chart. 3 months hourly, 30 minutes on a 3-month basis. You can see here making lower lows on the RSI while prices have been making incremental highs. I think this is a problem. This is where the market, in my opinion, starts stalling and probably indicating eventually we do get some type of a pullback. The level of pullback and the magnitude of a pullback is going to be, it will depend, but I think there's a pullback somewhere in store. Take a look at the Dow Transports daily. And the one thing I did want to show here is just one small observation. The Dow Transports daily is holding above the 13-week moving average. And anything holding above the 13-week moving average just shows momentum. So unless it moves back below the 13-week moving average, I think it continues being safe. Also recently bounced off the 50 level or somewhere around the 50 on the daily RSI, which is a sign of health. And you see that there was this move here, breakout above this line, which was somewhere. So this breakout here was this general area here. So this entry level here, which was very successful, began here. And so just to a straight line, you can see the market has come back and found support on the same level, which is a sign of health. So even the Dow Transports continue being healthy. They could break, but they haven't broken yet. So let's not rush to conclusions. Take a look at the S&P 500 weekly. Continues trading in that channel, well-defined channel here, going back to 2011. Yes, it is on the top end of this channel. And so we are more and more looking for pullback. For some reason, the market would go down. So we have to respect the power of the market. And I think, but eventually I think if we take a look at how the hourlies are behaving, maybe this is due for a pullback. Take a look at the RSI, and this line here, which we've been discussing the last couple of weeks, could be resistance. Could still be resistance because the market has not decisively moved above that line. Now this line was support on the way up. This line connects the lows on the way up and support zones when the market was moving high nicely above this line. All these lows were corresponding with market bouncing on this line. So these lows were helpful. Ever since we broke below that a couple of weeks ago, we broke below the line there. Now we seem to be back testing there. If it fails, then that could suggest there's a pullback in store. As far as the weekly for the S&P 500 is concerned, there seems to be some level of resistance here. Now, this could be immaterial, but it could be also serious, because the last time we stalled here and we were watching this a couple of weeks ago was here, and we suspected the market was going to pull back, and we got this nice move lower. So we are back in this general area. If the weekly RSI for the S&P 500 stalls here, then we can expect another pullback. And one of these pullbacks eventually is going to break the current bull market run. So we have to be careful with these pullbacks. We can't always assume that they are going to be pushing the market back to new highs. So that's one scenario. The other scenario is the market could actually, like it's been doing on the other markets like the Dow, if it moves above those two lines and trades in this zone, then the market is going to be tremendously making higher highs, dumbfounding. So we get resistance and a move lower, or we get the market trading above that line and a move higher. So one way or the other, we're going to know. Take a look at the S&P 500 hourly, 3 months, and again, lower lows, making lower and lower technical or RSI highs. So this negative divergence as the price is making new highs, to me, is a red flag. And my thinking here is eventually we get a pullback based on this formation, unless the market can move above that RSI declining line. If it breaks out and moves above that line, then you have to assume there's going to be another thrust to the upside. If we take a look at the Canadian market this past week, which was down about 2% to 1.8%, and we were talking about the possibility of a pullback here, from the prior weekly chart, just because of this line here, which has been support and resistance going back a couple of years. Every time the market was bouncing on this line, the market would move higher. It held support here, which were those lows. And now what was support on that same line has turned into resistance. So the pullback makes sense. And also, let's call it a relatively big down week. Why? Because the market moved below 50 on the weekly RSI over the last 2 weeks. So this 2-week down move from here to here, which took 2 weeks, also coincides with the market slashing below 50 on that time frame. Take a look at the daily for the Canadian market, and just to remind you, a couple weekends ago we had drawn a line like this, or something close to that. We were speculating that when the market was trading here, that maybe a pullback was due, because we thought resistance could take place. That's exactly what happened, and we see the pullback. I think this is developing slowly into more of a market that wants to go down, because for starters, right now, Canadian market trading below the 50 and the 200 moving average. You also see the crossover between the 50 undercutting the 200 moving average, so suggesting net that over time this could slowly grind and find itself lower, even though the market can't go straight in a straight line, but eventually that could be the case. Take a look at the monthly, and ever since we moved away from 69.1 here, so we moved away from 69.1, and this is this month. Since then, we've been working our way slowly but surely, making lower lows on a monthly basis. So we just need to see what happens here, but this is now starting to look more and more like a market that wants to go down, in my opinion. Also, take a look at when we had a bullish crossover between the 13-week moving average and the 34-week moving average. So that crossover between the 13 and the 34-week, so 13-week crossing over the 34-week moving average was very successful in moving this instrument higher. But now we see the possibility of the reverse, which is bearish crossover between the 13 and 34, suggesting that it would not be unusual that over time this market grinds lower. Let's take a look at the Brazilian market, 15 years monthly, and we still continue trading in this huge zone, connecting the prior monthly highs going back to 2010 and also the lows going back to 2002. So we are stuck in this huge triangle, and which might explain this volatility over the last couple of years here, because we are trading in this huge triangle. Over the last couple of months, we were expecting a pullback off these recent highs. So let me take that off. So off these highs here, we were expecting a pullback because the market had come back to a zone of resistance on the monthly RSI. And you can see uniform activity to that level and back below it. That was a sell signal. So this one is a market, in my opinion, that is going to trade sideways and probably under pressure because of the commodities also being under pressure. Take a look at some European markets. We take a look at the French market daily. So the French CAC. And you can see I had a nice session on Friday, up 2%, but really not that powerful because it brings it back to this level of resistance. So back to the line connecting the highs and also back to the resistance on the daily RSI. So this market really had a nice session on Friday, but really if you look at that session, it did not mean a lot because you can see it's back to where it has been finding resistance in the RSI and also as far as the price is concerned. If we take a look at the weekly for the French market just to see how it looks, we can see that still you got topside possibility of resistance here. This is where it's been stalling over the last couple of months. Also the RSI has been stalling at this level here. Somewhere around here is where we get this high, which is this resistance level here. So let me draw that again. So resistance in RSI has been taking place somewhere here, right there, or I can draw it in red. Resistance has been taking place there, and that gave us this break point, which also coincides with this break on the weekly RSI, which was this high and a pullback. Came and found resistance here, which was this high, and a serious pullback here. So we've worked our way back to this same band of resistance. If we stall here in the coming week in the price and the RSI also stalls, then this is where more than likely we get another pullback in that French market. Now let's take a look at the German DAX, so the German index, and we are seeing that it is closing above the prior weekly closing high. So the prior weekly closing high there, price for the prior weekly closing high was 10,009.08. So it's holding above that. So this is a breakout that we can watch. If it continues holding above that price range, then this is a good breakout. Maybe there's higher prices. But I see some signs of a trap, in my opinion. Why? Because of this channel here. There was a channel here going back many years, going back to 2011. So we broke below that channel at this point here. We broke below the channel. And ever since we've been coming here, we found it difficult to hold above the channel back, and we had this drop. So what we've done the last couple of weeks is come back to the same line. So come back to this underside of this line, which could also continue being backtest resistance. So let me draw that line again. This line here could still be resistance, and you can see we closed exactly at that line. So this could be backtest territory. There's also another argument that can be made that this is where you'd expect resistance on the weekly because of this line. Why this line? Because this line was support when the market was going higher, and this line was well established. So that line gave us those lows. Once the market broke below the line, and I'll show you that in a second. So once we broke below that line there, we can draw a straight line from there, like that. And what I'm getting at is we had a movement back below the red line there, which was the major high. We came close to here, to that line with a double top, which was this high. We've come all the way back to that general area. If we fail to hold above that and coil down with uniform activity, then even this is going to be a sell signal. But what I would watch for is 10,000.08. Anything above this level, which is this weekly closing high, is a reason to hold. If it drops back below that, then that's a reason to sell. So breakout is good. Failure to hold above this is a failed breakout, which is bad. Let's take a look at the FTSE, so the London Financial Times Index. And I just want to draw a simple line on it's a weekly chart. And there we have it. So this line connects the lows, connects these lows here, lows there, through these lows, and this low. Ever since we broke below that line here, this has become some type of resistance. So I'm looking for resistance on this chart here as a backtest failure possibility. Also, unless we get a breakout on the RSI highs, right there, connecting the prior highs of the weekly RSI, then this is also resistance territory. So we have this line being resistance there, something like that. So that being resistance, and also the top lines. So if you're bullish, you'd like it to break out above that declining RSI line. Otherwise, this is resistance territory. It needs to be above that line. Otherwise, this is where it stalls. And it could also, the reason why it could stall is because if you consider this big drop here, so this period here was a big drop, and that drop began when it stalled right there. So this stall point came here, and we are back to the previous stall point. If it stalls here, then expect the market to be dragged down. Take a look at the Chinese market, and man, this thing has just been on fire. Moved above this wedge and just keeps moving higher. One thing I do notice that the RSI has been defending 69.1 from this period here to where it's trading right now. So the RSI generally holding above 69.1 is the reason, in my opinion, why this market has suddenly just had this massive move to the upside. It's a very tough market to short based on that chart. Take a look at the monthly, and you can see that it is picking up momentum. Why? Simple reason is because the RSI is moving above 69.1, and also the fact that the monthly RSI is making a 3-year high. So we had talked about this, that the RSI making a 3-year high would possibly make this market move higher. But I want to show you something here. Go back to a monthly chart. I was also expecting some type of resistance, which this market refused to comply with. You can see there was resistance here in 2008. That break point was the reason for this move, and then lower from there. So we had drawn a straight line. Prior to this, in 2009, we had stalled here, which was this high. So we were expecting resistance here, but this market has blown past that resistance. So it's very tough to call which way it wants to go. I would not want to be shorting this one just because it's a tough one to trade. It moves very strongly in one direction sometimes. You really can't tell where it's going. So I would not want to make a strong bet on that Chinese market. Too strong to call. We take a look at the daily. And you can see, I don't know why people always get scared of holding stocks that are trading above 69.1. You can see it moved above 69.1 here, which was somewhere during this breakout. So that's when it started moving above the prior highs. RSI moved above 69.1, and then you get this massive period. So that one is a market that I'm not going to make a no call. I'm just saying it looks good. I would be scared to short it because even a pullback could still mean it could make higher prices. Let's take a look at the Japanese market, and we're going to consider the weekly. It seems to be breaking out after 2 weeks of rest below the prior weekly closing low or weekly closing high, about 17,500. So as long as it's holding above that, that's a breakout, and that's a good breakout. The one thing I did note, if you're looking for reasons why it should not go higher, is to a simple line somewhere here. The most recent stall point came here, which was this high, and a move lower. So above that line, this market should do well, which would be in the Japanese market. And below the blue line, if it moves back below the blue line, then maybe it stalls. So like that. Anything above that is bullish. Anything back below that, especially immediately, and especially if it moves back below 17,500, then it's going to be a failed breakout. Right now, this breakout looks good. You always want at least 2 weeks of rest. So you always want a market to make a high, or a market or a stock to make a new high, come and rest for at least 2 weeks, and then on the 4th week minimum for it to break out. It's exactly what has happened here. 2 weeks of rest below 17,500, and then on the 4th week is exactly what it's doing here, breaking out. So this is breaking out after 2 weeks of rest, means that it is a new leg to the upside. So there could be more upside, is all I am saying. You gotta be careful there. One of the best markets over the last year or so has been the Indian market. Even though it's been down slightly, it's not yet necessarily broken, because you can see the most recent breakout in the RSI was here. And so the stock remains healthy as long as it's trading above this line. So this was a perfect entry point on the way up recently, which was during this entry level there. And as long as the RSI is holding above this general area, or let's say as long as the RSI trades in this green area, it should continue being healthy. Yes, we got a pullback, but not necessarily dead yet. You can see that the weekly RSI continues holding above 69.1. So there's another reason to be strong. And the only time it starts dropping and maybe loses the momentum is if the weekly RSI drops below 69.1, which hasn't taken place. Take a look at the monthly for the Indian market, and you also see that it is holding above 69.1. In fact, it moved above 69.1 here and continues holding since then. So if you want to watch part 2, go on and log on to my website, www.muathe.com. I want to leave you with a couple of observations here quickly, as I always do. And we can see here that the S&P 500 above 69.10, that's a sign of strength. Take a look at the Dow on the monthly, also holding above 69.1 on the RSI, which is a sign of strength there. And the same thing with the Nasdaq. So as long as the main markets are holding above 69.1, like the Nasdaq has been doing since this period here in 2013, as long as the market is holding above 69.1, then this market could still be on fire. I always take a look at Apple before I conclude. So let me take a look at Apple. And you can see that the had a nice pullback, a relatively nice pullback if you're short, but the RSI continues holding above 69.1, and also the MACD, the RSI on the monthly for Apple continues holding above 69.1. So this is a strong stock, continues being strong until the weekly and monthly RSI move farther away from 69.1. So log on for part 2. Enjoy the weekend. Peace and blessings. Mwah! I am out.